Welcome to your daily solo 401k webinar with my solo 401k financial. Where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic is, what is a backdoor 401k? So this is your chance to get answers. Use the chat to ask questions on today's topic or any other topics surrounding 401ks and self-directed IRAs as well. Make sure to type them over and we'll pause and answer those questions as they come in. For now, let's talk about what is a backdoor 401k. So if you've heard the term backdoor 401k, you are not alone. It's a phrase that gets used often, but technically, it's not the correct name. Most of the time, when people say backdoor 401k, they are actually referring to one of two completely different strategies: the backdoor Roth IRA or the mega backdoor Roth 401k. Understanding the difference is critical because they follow different regulations, have different limits. However, they can even be used together. So let's break it down clearly. What people call a backdoor 401k. So in reality, there's no formal IRS strategy called a backdoor 401k. Instead, it's the backdoor Roth IRA strategy and then the mega backdoor Roth 401k strategy. When referring to a 401k based strategy, the correct terminology is mega backdoor Roth 401k. And again, this distinction matters because you can perform a backdoor Roth IRA and a mega backdoor Roth 401k in the same year. One does not need to eliminate the other, in other words. So what is a backdoor Roth IRA? So the backdoor Roth IRA is designed for high income earners who exceed the income limits for making direct Roth IRA annual contributions. So how does the backdoor Roth IRA work? Well, you make a non-deductible traditional IRA contribution, and then you convert it to a Roth IRA, and you're going to have to pay taxes, if any, on any pre-tax amount. And you have to also be aware of the pro rata rules that apply to the backdoor Roth IRA, where you also have to take into account any other IRAs that you may have, whether other traditional IRAs, simple IRAs, and or SIP IRAs as well. So the backdoor Roth IRA allows individuals over the Roth income phase-out limits to fund the Roth IRA indirectly by using the backdoor Roth IRA. And key characteristics of the backdoor Roth IRA is that annual contribution limits apply, which is IRA limits, which are much lower than a 401k limit. And again, they're subject to the pro rata rule. It's not an employer plan, it's an individual retirement arrangement. Income limits apply for direct Roth contributions, but not for conversions. Now let's talk about the mega backdoor Roth 401k. So the mega backdoor Roth 401k is completely different, and it's significantly more powerful than the backdoor Roth IRA. So instead of using IRA limits, it uses the much higher overall 401k limit, which is $70,000 for tax year 2025, for example. For tax year 2026, it increased by $2,000 to $72,000. So there's a way to actually contribute the entire overall annual limit, for example, of $72,000 for 2026 to the voluntary after-tax 401k holding account, and then convert those funds to the Roth 401k designated account or to a Roth IRA. So how does the mega backdoor Roth work? Well, you contribute voluntary after-tax contributions to a 401k. You then, again, convert those funds either to a Roth IRA via in-service distribution or the Roth 401k designated account via an in-plan conversion. So this will allow you to move far more money into Roth than the standard Roth IRA limits allow. Let's talk about the two requirements for a mega backdoor Roth 401k. So first of all, not all employer 401k plans allow this strategy. To qualify, the plan must allow for voluntary after-tax contributions. And this is different from pre-tax contributions as well as Roth 401k elective deferrals. Voluntary after-tax contributions are essentially a third bucket of money inside that full-time employer 401k. The second requirement for the mega backdoor Roth 401k strategy is in-service distributions or in-plan Roth conversions. So your full-time employer 401k must allow you to move after-tax funds from that 401k to a Roth IRA while still employed, or convert those voluntary after-tax 401k contributions internally to the Roth 401k designated account. Without these two features, the mega backdoor Roth strategy is not possible. Again, go ahead and type over any questions you have regarding today's topic or any other aspects surrounding 401ks and even IRAs, and we'll pause and talk about those specific topics. So, do all employer 401k plans allow it? Unfortunately, the answer is no. We have discovered that more full-time employer 401k plans are allowing for it. So many employer 401k plans, specifically full-time employer 401k plans, do not allow voluntary after-tax contributions or in-service distributions. However, some large employers do. For example, the Amazon Corporation full-time employer 401k allows for the mega backdoor Roth strategy. And Amazon, they use Fidelity Investments to administer their Amazon 401k. So that's an example of a full-time employer who offers a full-time employer 401k that allows for the mega backdoor Roth 401k strategy. I won't be surprised if more and more full-time employers start allowing for it. Of course, every employer is different. So you must review with that 401k employer, the administrator of that 401k, you're going to want to check with them to see if that full-time employer 401k allows for that mega backdoor Roth 401k strategy. Now, from a self-employed business side of things, you actually have a lot more control with respect to what you can perform under that 401k plan, because you are the trustee of the plan. So when you're self-employed, you can open what's called a solo 401k plan, which makes it easier to perform the mega backdoor Roth 401k strategy, also called the Mega Backdoor Roth Solo 401k strategy, when we're talking about an owner-only 401k, which is effectively a solo 401k plan. So for self-employed individuals, the Mega Backdoor Roth strategy is often much easier to implement. With a properly structured solo 401k plan, you control the plan design. So when using a self-directed provider like my solo 401k financial, who offers a solo 401k, the plan is structured to allow for the Mega Backdoor Roth solo 401k strategy, which allows for voluntary after-tax solo 401k contributions and plan Roth conversions, Roth sub-accounts, conversions to the Roth IRA if you want to convert to the Roth IRA instead of the Roth solo 401k, and effectively maximum flexibility under the IRS regulations. So because you are the trustee of the solo 401k plan, you can decide whether or not you want to utilize the Mega Backdoor Roth strategy from day one. So this level of flexibility is rarely available inside traditional employer-sponsored plans, but it is available inside solo 401k plans. So let's talk about the Backdoor Roth IRA versus the Mega Backdoor Roth 401k. And we may have covered this already, but again, confusing the backdoor 401k with the backdoor Roth IRA can lead to misunderstanding contribution limits, missing out on Roth opportunities, incorrect tax planning, assuming you qualify when you don't. So the mega backdoor Roth 401k can potentially allow tens of thousands of dollars per year to move into Roth status, which is far more than a backdoor Roth IRA alone. And in some instances, you can actually perform what we like to call the Roth trifecta in the same year. That is, perform a backdoor Roth IRA, a mega backdoor Roth 401k through your daytime employer 401k. And if you're self-employed on the side, you can even open a solo 401k for that side business and perform a mega backdoor Roth solo 401k conversion as well. So 3 conversions in the same year. So talk about really supercharging your Roth savings, the retirement savings. And there's a link right there to a webinar and a blog posting we did on the Roth trifecta. So the key takeaway is that there's technically no such thing as a backdoor 401k. Instead, the backdoor Roth IRA is an IRA strategy for high income earners. The mega backdoor Roth 401k is a 401k based strategy using voluntary after tax contributions and Roth conversions. And again, if you're self employed, a properly structured solo 401k can provide maximum flexibility to implement the mega backdoor Roth strategy efficiently and in a compliant manner. So if you are a W-2 employee, your employer plan must specifically allow for voluntary after-tax contributions and service distributions or in-plan Roth conversions. Understanding the terminology and the rules can unlock one of the most powerful Roth wealth building strategies available today. Okay, I don't see any questions for now. So that's it for today's solo 401k session. Thanks so much for investing your time with us. Your time is valuable. If you haven't yet, please like and subscribe so that we can keep building this community. We'll be back here again later today for a second time, and we'll cover a different topic and answer your questions as well live on the air. Until next time, have a good rest of the day.